If you have a business in California and you are selling tangible products, figuring out exactly how to calculate, charge, and pay sales tax can be confusing. Today, I want to share with you the CDTFA's regulations on charging sales tax in California in a clear, easy to understand way in order to help you understand your sales tax obligations as a California seller. First, I must give the disclaimer that I am not a tax professional and this is not tax advice. Please use this video as a resource for pointing you in the right direction in terms of accessing California's public information on sales and use tax filing. Always consult a tax professional. California sales tax is filed through the CDTFA, the California Department of Tax and Fee Administration. You are required to obtain a California seller's permit, file and pay sales and use tax returns if you are selling tangible products in California, if your products are housed in a California warehouse, or if your customers are receiving their items in California and you meet the minimum sales threshold. Obtaining a California seller's permit is relatively easy and free through an online application. I have a full tutorial video on registering for your seller's permit, which walks you through each step, linked in the video description down below. Once you hold a California seller's permit, you are then allowed to charge your customers sales tax. This can be done either as a separate line item or lumped into the total sales price of the item. In California, digital product sales are not subject to sales tax. Tangible products and the labor charges that will result later on down the line in a sale of a final tangible product are subject to sales tax. Once you have your seller's permit, it can be confusing to determine how much sales tax you should be charging your customer and then will be obligated to pay to the CDTFA. Implementing a tax software like TaxJar can be a very easy way to simplify and demystify the process. This software imports your transactions and uses the data from the sales to calculate sales tax that will be owed and keep tabs on when you are reaching the threshold to be required to hold a seller's permit and file sales and use tax returns in each state. Each state has a different threshold and rules when it comes to obligations surrounding seller's permits and sales and use tax returns. This can get complicated, and it is truly a great investment to have a software such as TaxJar to monitor your compliance in the state. And no, I am not sponsored by TaxJar. It just makes things a million times easier. In California, retailers located outside of California are required to register with the California Department of Tax and Fee Administration, file and pay California sales and use tax returns if the total combined sales for property for delivery in California by the retailer and all persons related to the retailer exceeds $500,000. Retailers with a physical presence in California are still required to be registered with the CDTFA even if they don't meet that $500,000 threshold. The physical presence requires you to be registered. Examples of a physical presence are going to be at maintaining inventory or an office at locations in California, having representatives in California for purposes of taking orders, making sales, doing deliveries, installation, etc., and leasing equipment, including a computer server in California. When it comes time to calculate your California sales tax, you need to first understand that sales tax is made up of two parts: the statewide sales tax rate and a separate additional district tax rate. Most locations add on this additional district tax rate, and each location has a different rate. This is why each district has a different sales tax rate. The sales tax rate is determined based on where the product is delivered to the customer. For in-person stores, this will be your business location. For businesses shipping items to customers, this will be the location the product is delivered to the customer. The CDTFA has a tool that you can use in order to enter the address where the product is going to be delivered to the consumer and find the sales tax rate there. When you file your sales and use tax returns, there will be a step in the process to note where your sales took place, and the district tax will be automatically calculated based on the amount that you enter in for your sales in each location. However, it's important to know these tax rates in advance so that you can calculate the exact amount of sales tax due from your customer at the time of sale. If you overcharge your customer in terms of sales tax, you will be obligated to either return that amount to the customer or send it to the CDTFA. For those of you who are utilizing a third party platform to make your sales, you may not be obligated to collect and remit sales tax because this platform does it on your behalf. Platforms that collect and remit sales tax for you are known as marketplace facilitators. When you make sales on a marketplace facilitator, the sales tax is collected and remitted to the CDTFA, but it never enters into your hands. The marketplace facilitator calculates, collects, and sends this instead of you. It's really important to understand if you are selling your items on a marketplace facilitator or if you are simply selling them on a different sales platform that is not handling the sales tax for you. Keep in mind that just because a platform calculates the sales tax for you, it does not necessarily mean that they are the ones sending it to the CDTFA. Make sure that you thoroughly understand if the marketplace you are using is in fact a marketplace facilitator or if they're merely calculating the sales tax and sending it over to you. New marketplace facilitator legislation states that you are not required to register with the CDTFA if all of your sales are done through a marketplace facilitator. However, this does get very complicated because if you have an established business presence within the state of California, including simply having items held in a California warehouse, such as through Amazon FBA, then California does actively pursue notifying you and charging you penalties for not being compliant with being registered with the CDTFA. If you are not certain if you should be registered with the CDTFA, number one, call the CDTFA. They respond to questions fairly quickly and will be able to answer your questions over the phone directly. Number two, consult with a tax professional. Contacting a CPA, an accountant, or a bookkeeper that specializes in California sales tax is going to be able to get you the answers that you need and make sure that you are legally compliant. And number three, if you are in doubt and you are a business that holds a business presence in the state of California, then registering with the CDTFA will mean that you can then file sales and use tax returns that do not actually require you to pay sales tax because you will merely be noting that your sales were conducted through use of a marketplace facilitator and you will not be paying that sales tax a second time.